So welcome to our alternative investments video conference. Today is May 11th, 2023. And there certainly have been a lot of theories floating around about what the exact right thing to do, both with your cash and also what's going on in the government. So let's dig in and see, particularly alternative investing, crypto, BRICS, the new BRICS currency that's supposed to be happening, private equity, gold, silver, even real estate. And we're going to dig in and see what really works and why in a debt world, because we definitely know we're in a debt world. We definitely know that we have a debt ceiling fiasco. And once that is resolved, hopefully in the next week or two, so that we don't avoid a default, once that resolved, we still have a boatload of debt. And how are we going to deal with that so that, we all are not shortchanged, right? Because that is exactly where we're headed with this much debt on the horizon. All right, so we're going to dig into all of this momentarily. And more specifically, what you can do to protect your wealth now, to be properly diversified, hedge against, nonsense, and much more. All right, see you momentarily. One other thing that I wanted to say before we dig into the details, I always tell everyone to grade your guru before you listen to anything they say. I do want to say that we've been doing this since 1999. Our strategies are easy as a pie chart. They earned gains in the dot-com and the Great Recession, outperformed the bull markets in between, saved the nest eggs in the pandemic as well. These are time-proven 21st century strategies. A lot of people are using last century strategies and they just don't work in tough times. They do fine in bull markets because everybody wins when the market goes up. The question is, if we have a recession, which most people are predicting, are you properly protected? If we have a debt ceiling crisis, if we have a debt crisis, if we have more bank failures, if BRICS currency continues to gain momentum. Now, we're going to dig into all of that. But I wanted to make sure that you understand that the reason we're enthusiastically recommended by Nobel Prize winning economist Gary Becker, and also had another University of Chicago economist write the foreword to the ABCs of Money for College, is because these strategies are easy, they're efficacious, right? So they work no matter if you're well-educated and super rich or not so well-educated and not so rich. They're easy. They work, and they even can work by saving you thousands annually in your budget. So we'll really dig in. Today is all about alternative investments. We dig into the rest of the stuff at our 3-day retreat, which I'll tell you more about at the end. All right, see you momentarily. We'll dig into what you should be doing about all the nonsense that's going on. So I'm going to go ahead and show you the blog that I just wrote, and we'll go through that, and I'll add the color that I think is really important for us. So again, the easiest way to get there is just nataliepace.com/blog, and do a search for fiat or crypto, and you will access this blog quite easily. So the first thing is that we have just been seeing a lot of people emailing us and saying, hey, everybody's concerned about fiat currency. Everybody thinks the dollar is going to go extinct. BRICS currency, all of these things are coming up, partially due to the bank failures, but also due to the amount of debt and also the debt ceiling issues that are going on right now. So let's unpack what it is that's going on and what is a good idea and what is not a good idea. All right. So the first thing that I looked at was crypto, gold, silver, real estate, banks, private equity, BRICS, innovation and freedom, debt and bonds. So I do encourage you to check this out. But one of the most important things is full faith and credit. That is what currency exchange is based on. And the reason that we have not seen crypto become adopted as a currency is that its price is too volatile. So one of the hallmarks of currency is that it really needs to have a fairly stable value. You're seeing a lot of concern over inflation right now, right? Well, imagine if our dollar was only worth 20 cents. And that's how far Bitcoin plunged from $69,000. It's been as low as $4,000. So it's really important to understand that at this point, doesn't mean it won't happen in the future, but at this point, cryptocurrency is something that is really been used more as a trader's platform. The idea of it is exciting. And so people go on a YOLO expedition. You only live once, trying to get rich really quickly. And yeah, if you have a plan for capturing gains, that might not be a bad strategy. But if you just ride in the roller coaster, the crypto roller coaster, and trying to somehow make it through these crypto winters, that is not necessarily a good strategy. So our nest egg pie chart strategy actually works really well for crypto, because you can use it as a hot slice. And in the, when it goes to the moon and it's now one slice is now 10 slices, sell 9 and trim it back to 1. And that way, when it falls down to the gutter again, and your slice is now a sliver, you have all this liquidity to buy low, right? Better plans. So we do teach that at our investor educational retreat. I'm not anti-crypto. I'm just saying it is a roller coaster, and it's a really good idea for you to have a better plan for it, since it's mostly a trader's platform at this point. Another thing that you really have to watch out for is that a lot of people are paid to promote it. And we have seen a great deal of problems in this area, from FTX that was paid to promote by Tom Brady and Gisele Bündchen and Stephen Curry and even Larry David. Kim Kardashian was involved in Ethereum Max. That was a sheer pump and dump scheme. She ended up paying, a big fine to the SEC on that, much more than what she got paid. So it's really important, because somebody had emailed me, and this person was the former CTO of Coinbase. And, so you think, wow, well, if he's the CTO of Coinbase, he must really know what's going on. But there's a little bit more, and I'm going to unpack that at the end of this video conference. I don't want to lead with that, because that was a particular question that came in from one of our people. So I will go into it a little bit more, but the paid to promote thing is a problem, not an asset. So if you start seeing this coin is going to be fantastic everywhere, doesn't mean that it's actually a good idea. It could be something that's just being paid to promote. And in the worst case scenario, like the Kim Kardashian one, an out and out pump and dump scheme. Although people are saying that, FTX was sheer fraud as well. So what about gold and silver? Gold and silver both will hit their all-time highs in 2011. During the debt ceiling crisis of that day. So if we if we get too close to the deadline, gold and silver could go up. Another reason that gold and silver have been like the worst performer for the last decade is that stocks have been so strong. And even though stocks had a weak year last year, they've been fairly resilient this year. So it's really not, that again, the fact that gold and silver have held kind of strong with stocks being on fire says a lot about people not having full faith in the market, even though they're ready to certainly, be greedy and take profits. So I think that, we still have a slice of silver as in our HOTS as our samples. Why silver and not gold? The reason is that gold is trading at its all-time high, and silver is still half of where it hit in 2011 when it hit its all-time high. Now, with real estate and shelter inflation, I want to say I just did a video conference last Thursday all about real estate, and I'm doing a real estate masterclass June 3rd. You don't have to attend a retreat to attend the real estate masterclass, although if you do attend one of our money makeover retreats, the 3-day ones, then of course it will make more sense to you. But the bottom line is this: real estate will hold its value better in a debt world. So real estate is down 10%, stocks were down 20% last year, long-term government bonds were down 26%. So what we're seeing is that there's a lot of credit risk and overpriced equities. So there's a lot of risk in stocks and bonds. Real estate's overpriced, but it tends to have a slower down and a slower up, and it can hold its value better. And of course, if you purchased it for a decent price and you can afford it, you're living there, and that's another added bonus. I think that if you are not satisfied with your real estate, whether you need to downsize, you just purchased and you have buyer's remorse, that you absolutely owe it to yourself to read the real estate section of the ABCs of Money 5th edition now, and or get private coaching. We certainly have helped many people to extricate themselves from perilous real estate situations. It is more difficult, and the longer you wait, the more difficult it becomes. So if you're when the real estate is still pretty high, if you're already dissatisfied, now is the time when you want to look for out-of-the-box solutions, right? Okay, so you can email us at info@nataliepace.com. You can register for our real estate masterclass on June 3rd. You can read the ABCs of Money real estate section. But again, the bottom line is that if you've done it right, real estate is a good way to preserve wealth, especially in a debt world. We can rethink things even if you need to downsize, so that maybe you can still have your wealth preserved in this hard asset and still downsize in a manner that's going to actually give you a better quality of life, a much richer life. It has to just be done properly. That's all, rethought. Now, so again, there's a lot more there to unpack, so I do recommend it. Now, the issue with private equity placements is that almost all of the ones that we come across, people don't do their due diligence. So, after the fact, we get, a call, like they're a little concerned, and I look into it, and the P&Ls are usually terrible. And yes, if you ask for profit and loss statements, all of these things, if you want to see the balance sheets before you invest, you need to do your due diligence. So I have yet to see one private placement that was a good idea for a Main Street investor. Doesn't mean that they're all going to be bad. It means that you have to do 10 times the amount of research that you would do for a normal investment. So I also want to encourage you to read the experience that one of the couples that we helped, that if you just click on it, you're going to get their experience there. And this was a broker that sold them into something that he told them was completely safe and was going to give them a great income. It was a high yield private placement. And they lost about, 20% of their money, and he wouldn't return phone calls. So it's a lot easier to get a broker to call you back if they're selling you something than if you're trying to extricate yourself from something they sold you. So again, you want to do the due diligence prior to buying. Now, with BRICS, GDP, and the economy, I just wrote a blog on this, and I do recommend that you read about it. So this is the email that came in to me from Reuters. But when I did look into it more, the bottom line, and I do encourage you to read that full blog, the bottom line is this, is that the Chinese yuan is increasing, but it's still less than 5% of the global reserves. And mostly the trade is with Russia, a few other countries, about a handful, but mostly Russia, when nobody else is, they aren't able to borrow through the SWIFT program. So, and the person that is talking up the BRICS currency, which doesn't exist yet, is actually a Russian who is a friend of the current president there. So they're really good at making their information look like it's mainstream, but it's actually not necessarily mainstream, and the currency doesn't exist. So before you read anything, you want to know who wrote it, you want to know who's saying it, and what is their incentive to say it. So again, if you're interested in what's really going on with BRICS and the Chinese yuan and the petro yuan and all of that, I did an entire blog researching it. I do recommend that you read it. At this point, I would say it is increasing, but these are oppressive regimes. We're the biggest customer for China. So, we have to have some sort of a relationship as long as China is the factory to the world. And that does carry leverage with it. So yeah, it's more complicated than these simple. And by the way, anytime an email comes in, or even somebody that you think might be really smart says, this is the biggest problem in the world, and this is the only solution, they have an incentive to sell you that solution, whether it's they're taking a piece of the sales commission or a pump and dump scheme, whatever it is. So be very, very, very careful whenever you get someone who wants to scare the heck out of you and then sell you the only thing that's going to cure it. All right, so I do encourage you to read more about debt and bonds and equity prices in particular, because stocks are really high and bonds are losing money. So it is an issue. Again, this is just more information that's included with this blog that I'm telling you about. Now, I also want to go through my PowerPoint real quickly for you. So are these alternative investments a great hedge against uncertainty? And I would say real estate holds its value better in a debt world. Private equity is very high risk. I don't think it's appropriate for most people, and you must do your due diligence. Gold and silver, I would have a slice in my at-risk side. FX, I think it's too complicated for most people to understand. In crypto, I might consider a hot slice. Not in the fringe coins. I would say stick to the big ones, and or their counterpart, their altcoin counterpart, like Cardano with Ethereum, stuff like that. That's really got a lot of liquidity behind it. And have a capture gains mindset and the ability to do that, which our pie chart system does well, especially with our rebalancing program. You'll learn about that at our investor educational retreat. This is the 10-year return. And as I said, gold is the worst performer over the 10 years. Now, usually when you see it well underperforming its longer term trajectory, that could mean that it's what we call oversold. In other words, it could be poised to do much better. Those things that have done much better than what they normally do are typically the ones that are poised to do worse going forward. That's just the way it goes, right? If something is kind of exceeding what it's normally meant to do, it usually doesn't do as well. So here we see that usually small caps perform much better than large caps. And what we see over the 10-year period is the opposite. So, and as I told you, equity prices are really high. This is the 1-year return. So again, real estate was a bright spot. This year, real estate is down 10%. That was last year. Real estate was the bright spot. And everything went down, and long-term government bonds were the worst. And here's another chart that shows that. So just remember that a lot of what's happening with cryptocurrency is caused by whale waves. What are whale waves? Well, it's the big hedge funds that are priming it to try to buy low and then pumping it up and then selling high. And every time it hits a high, most Main Street investors are having difficulty selling because the whales are in front of them. So you need to make sure that you do have that capture gains mentality. And the nest egg pie chart system does that really, really well. We also talk about that in the ABCs of money. So remember that FDIC, it's not FDIC insured, it's not regulated, and celebrities are paid to promote cryptocurrency. This is our sample pie chart. And again, this is something we spend one full day on at our Money Makeover retreat. The next one is June 10th, and our early bird pricing ends on Monday. So check it out now. Go to nataliepace.com and click on the retreat flyer. There you'll learn more about the pricing, the times, and you'll also read a lot of testimonials, including, as I've told you, Nobel Prize winning economist Gary Becker. So gold is at its all-time high, but silver, as I mentioned before, but you can see it in this chart, is still half the value of its all-time high. So in our nest egg pie charts in the hot slices, we're putting in silver rather than gold. Now, another thing is that what we end up happening is that when Bitcoin hits 69,000, everybody wants to buy in. When Bitcoin goes down to 4,000, nobody wants to buy it. The same thing happens with stocks. In 2009, it was the bottom. Everybody was trying to sell. They were selling low. And then most people that did sell low and they stayed out of the market, they were calling us in 2017 or 2018 after we had seen, almost a decade of gains in the stock market. And now they're ready to get in when it's almost at the high. So again, with this cycle of emotions, until you become an experienced investor, your emotions work against you. So the right answer is, if you don't want to do all this research, have the nest egg pie chart system. It's really easy: small, medium, large, value, and growth in 4 HOTs. And if you don't know how to pick HOTs, then either pick something that you think is really hot, but you're limiting it to a slice, so you're not selling the whole farm on it, or do whatever a trusted analyst would say. So in our retreats, we say what we think is hot. I said silver already. I said crypto already. Those are a hedge against debt and fiat and all of the things that you're worried about. But other things that you might consider would be some sort of technology hot slice or a biotechnology hot slice. Or, there are other things like clean energy as well, or solar. So there are things that you can invest in that might do much better than the market. So I already talked about BRICS currency. Please go to that blog that I just wrote last week on it. Again, it's the title of it is "The Yuan Overtakes the Dollar." So if you go to nataliepace.com/blog and just search on yuan, you're going to easily access that right away. Well, we're going to talk about grading your guru in just a moment, because that's a big key. I wanted to mention this as well, because there has been talk that because China and Russia are increasing their gold holdings, which they are, that's one of the reasons the dollar will become extinct. But I want you to see that the United States has the most gold of all the countries by far. And if you include the United States and Europe, then it's really a great, great deal more than Russia, China, and Brazil, India. So again, we're going to talk a lot about real estate in my real estate masterclass June 3rd. Whether you think you're rolling in equity, or you have buyer's remorse, or you're ready to downsize, or you've been living with your parents for so long and you're ready to buy, it's really important to get this right, because doing it right can be the best thing that happens to you. But as we saw with 20 million people who lost their homes in the wake of the Great Recession, doing it wrong can be hell. And your FICO score goes in the toilet. So it's not just that you lose your home, which is a horrifying thing as well. So home prices have gone down this year. Home affordability is still terrible. So we're going to have to think outside the box in order to get this right. There's a 7 tips, a 10-point checklist. That's all included in my book, The ABCs of Money, 5th edition, in the real estate section. However, there's one thing about reading and there's another thing about learning, right? So if you are in a position where you want to buy, you want to downsize, you're worried about your real estate holding, you have buyer's remorse, it's a much better idea to attend the one-day masterclass, where we can actually really go into details and depth. We can help you to think outside the box for solutions that might really work for you. So again, email info@nataliepace.com or call 310-430-2397. So these are some of the warnings that we're going to be discussing in our June 10th retreat. I already talked about private equity. You want to know what you own and why, whether it's attending our June retreat or getting an unbiased second opinion now. Now is the time to protect your wealth. If you wait for the headlines, it's too late. So we do anticipate a recession in 2023. The last two recessions cost most investors more than half of their wealth, and that was with bonds doing well. With bonds not doing well, this is a bit more of a problem. So now is really the time to know. And yes, if you are concerned about fiat currency, the debt ceiling, BRICS, and all of this, the solution isn't just buy that one thing that they're dangling and that carrot that they're dangling. It's actually, let's get mindful about protecting our wealth, because there are time-proven 21st century strategies that work. These are just some of the testimonials. We're happy to send you a boatload of them. The amount of people that we've transformed their lives is something that's very heartwarming for us. Also, we do have a free personalized pie chart web app. Just email info@nataliepace.com and say, I'd like my free web apps. And that is our next retreat. So set yourself up for a fun and stress-free summer by protecting your wealth now. Email info@nataliepace.com or call 310-430-2397. And remember that the early bird pricing ends on May 15th, which is Monday. So you want to look at it now and you want to register now. And there is a discount for families registering together. Thank you for joining me, and invite your friends to watch this as well. We have been adding a splash of green to Wall Street and transforming lives on Main Street since 1999. And we really want to do that for you as well. Thank you for joining me, nataliepace.com. And please join me on social media as well, where I do daily money tips. So again, if you go to nataliepace.com, at the top of the page, you're going to be able to see how you can listen back to my podcasts on Apple or Spotify, the YouTube channel, Facebook, Twitter, and Instagram. Thank you again for joining me, and I will see you at our next free video conference. Goodbye now.